My name is Tyrone French. I've been in the financial services industry for over 20 years. Some people have made references to as far as why is it that a lot of financial advisors don't advise people on gold and silver. The simple answer is that they're just not trained to do it. There's no money in it. So the issue is, when I found 7K Metals, a little backstory about that, and Don Marie reached out to me on LinkedIn. And it was a situation where my dad had recently passed away. And I'm pretty busy. A lot of stuff really don't catch my attention on LinkedIn. I have over 30,000 followers on LinkedIn. So I'm getting a lot of requests on a daily basis, and I just don't have time to follow up with a lot of stuff. But I got this message about gold and silver and 7K Metals. I replied to Don and said, hey, Don, look, I got a situation. I like this. Send me some information. But my dad had passed away recently, and I'm dealing with funeral arrangements and stuff like that, but I will get back with you. Well, I wasn't working during the time as far as my business because, again, I'm dealing with family issues. And I had some instances where I had some time. So I would take a look at the information that Don sent me. I'd take a look at it. The more I looked at it, the more I saw all the components of what I've been talking about over the past 20 years. And just give you a little bit more background. I'm actually an author. I wrote a book called Closing the Wealth Gap. What I did was I took the best of what I know and what I've learned and what I was trained on about creating wealth, and I put it in a small book. Didn't write that book for sales. What I wrote it was for mindset. And I want you guys to stay with me for a minute because we're going to talk about the Sound Money Wallet. But that Sound Money Wallet is not going to mean as much to you unless you have the proper mindset to really understand the value that you're getting with this membership. Now, in Closing the Wealth Gap, I got this saying, it's called yo-yo economy. What that means is that you're on your own. And so during this pandemic, we saw that the government bailed out the banks. The government bailed out the corporations. The Federal Reserve got billions of dollars. But when it came to the individuals, the people, a lot of people got a check for $1,200. And they were fighting whether or not people could literally get that $1,200 check. Fast forward, a lot of people, even though the check was allocated, what they found out was a lot of these people were unbanked. They didn't have access to banks. They didn't have debit cards. So the IRS had a hard time even getting these people their checks. So where am I going with this? In our industry, we got this currency called fiat currency. And so with fiat currency, now going back to my industry, the norm is to tell people, hey, look, you have to have 3 to 6 months of savings in an emergency fund just in case something happens. So mind you, we're dealing with, our money is not on a gold standard. So the minute you try to start saving money in a savings account, which is going to pay you less than the inflation rate, meaning that the percentage on that could be 0.25%. The minute you put that money in that account, it's being eroded by inflation. So when you really understand that, that is just not sound investment advice. So where would that information come from? The banking industry. Because when you put your money into, banks deal with fractional lending. What that means is that the money that you put into that account, every dollar that you put into that account, they can turn around and lend out $9. So when you're putting your money in that account, earning no interest, and the money's being eroded, that's why one of the reasons why most people cannot get ahead financially. Because the more money you make, that money is becoming worth less. So in the future, you need more dollars to pay for what you would have paid for maybe 3 or 4 years ago. Let me give you an example. Let's say you got $10,000 in your account, and you want to use that $10,000 to buy a car. But for whatever reason, you decide to wait. You decide to wait for 3 years. Something came up or whatever, but you decide to wait for 3 years. In 3 years, that same car that you wanted to buy at $10,000 is now worth $13,000. So what happened? Did the value of the car go up? No, the money that you had went down. It's worth less. So when you understand that, that is your incentive to really trade these fiat dollars for precious metals or gold and silver. That's where the sound money wallet comes in. Now, there's a book that I like to reference. It's called The Richest Man in Babylon by George Clayson. If you don't have this book, I highly recommend you get this book. If you have the book in your library, I highly recommend that you read this book again, because there's a saying in that book, and he was teaching his young protege what he needed to do to get ahead financially or to create wealth. And what he told him was profound. He said, in order to get wealth, he said, I became wealthy when I decided to pay myself first. And the issue was that the young man was saying, well, you know, I'm in a position where I have income coming in, but there's no traction to it. So again, he was like, I found the road to wealth when I decided that a part of all I earn is mine to keep. That's a long, fancy title, a fancy way of saying that you literally need to pay yourself first. Now, the industry standard is to have a minimum of 10%. But the industry standard is telling you to take that 10% and put it in fiat money or fiat currency. If you're a member in 7K Metals, now you have an opportunity to go into your back office and use this system called the Sound Money Wallet. What that means is now you can take $100 or $50 or $20 or $2,000 or $5,000 and put that money inside of your wallet. Now, once that money is inside the wallet, you can literally allocate a certain percentage to gold and silver, or keep a certain amount in your cash account. Why is this important? Because let's say you decided that you wanted to buy, you got some information, you decided you wanted to invest in gold and silver, and you saw a commercial where there was a company that will authorize you or that would allow you to do it. Well, if you look in the fine print, it's going to tell you that you need anywhere between $5,000 and $7,000 and $10,000 for an initial investment. With a 7K Metals membership, you automatically have access to this wallet, to where if you want to purchase $50 worth of gold, you can literally take money from your cash reserve and buy $50 worth of gold, and it will tell you exactly what percentage of an ounce of gold you have in that gold account. You can take, let's say you take $100 and put it into the silver category. It's going to tell you exactly how many ounces of silver that $100 actually purchased. So why am I prefacing this by breaking it down into stages? Because you literally have to get into the habit of paying yourself first. Now, I like what Mr. Hubbard, when he prefaced Robert Kiyosaki, and what he was talking about is the 4 quadrants. And what Robert Kiyosaki talks about wealth creation. Well, a lot of times when you're poor and middle class, you're not looking at it based on your income and expenses, assets and liabilities. You're not looking at the asset and liability column. What you're looking at is the income and the expense column. And you're taking money, fiat dollars from your job, trading time for money, and it's going right back out the expense column. So again, there's nothing hitting your asset column, so you are not in a position where you are accumulating wealth. Also, let's say you get to the point where you're starting to understand that you can actually make more money, and you start a business, and you decide you want to start this business to create an extra income stream. We call it multiple streams of income. Well, the problem is when most people start a small business and they start creating this multiple streams of income, they generate another income stream. They use the income that they've generated and it goes to the liability column right back out to the expense column. What I mean is that they end up buying better clothes. They end up getting a better watch. They end up buying a better car. They end up, getting a better lease as far as an apartment. They end up moving. They get a better house with a bigger mortgage. Well, those are liabilities, and so what Robert Kiyosaki was trying to point out to a lot of people is that you need to focus. Financial literacy is focusing on the asset column. And let me tell you that one more time. You do not have financial literacy, or you're not considered to be financially literate unless you are focusing on the asset column on your balance sheet. So let's say you started a business and that business is generating an extra $500 a month. Well, you can't live off of that. And so what most people will do is they will discount that 500 because they don't understand the definition of wealth. See, you're wealthy when the income from your assets exceeds the output or the outgo from your liabilities and your expenses. And let me say that again. You are considered wealthy when the income from your assets exceeds the outgo from the liabilities and your expenses. So we should not discount or despise small beginnings, because let's say you get to the point where you've generated $500 a month. And again, you discount that. You say, well, that's only $500. I can't live off that. The average person will want to blow that money. Well, in Wall Street, let's say if you picked a stock, XYZ stock, and let's say it was a preferred stock and it was paying dividends, and that $500 a month turned into $1,500 per quarter. Any investor worth their salt will tell anybody that I'm getting a $1,500 dividend from my stock, and they will be applauded because that would be financial astuteness. Fast forward again to what you have with 7K Metals. If the average commission that you're generating is $500 in passive income, that is an outstanding return on your money. So let's say you cycle and you have that $500 go into your cash money, your sound money wallet. At that point, you can literally transfer those credits or that fiat currency directly into a tangible asset, which is gold and which is silver. Now, in the financial world, we got this thing, a term that's called dollar cost averaging. All that means, that's a fancy way of saying that you get into the habit of paying yourself first with a set amount of money. That set amount could be $50 a month, it could be $100 a month, it could be $500 a month, $1,000 or $5,000 a month. The reason that you want a dollar cost average in your sound money wallet is because when the price of gold or silver goes down, if you're dollar cost averaging, you're buying more of it, but you're not spending more money. You're just buying more of that tangible asset that's creating that income that will create that value that you're looking at in the future, as far as having enough cash, having enough money to be able to survive the inflation rate at that time. So let me give you an example. Let's say you're at a point to whereas you're starting this business and you like the idea that you have your membership. You like the idea that it's an annual membership. You like the idea that membership is generating X amount of points. Well, let's say that you're not a strong recruiter, but you like the fact that you have you have the membership. Let's say you're dealing with you're on the auto saver where you got a collectible coin coming in so that you're not making that $1 million mistake, but you're also buying the tangible asset in your back office in the sound money wallet where it's gold and silver. Because the average person is only going to recruit and network marketing about 2 people. Let's say you do that. Let's say you bring in your 2 people, but you decide that you're going to teach or tell other people about what you're doing. And they turn around and they duplicate, and they do the same thing that you're doing. Even though you haven't recruited anybody else, your organization is still growing, and they're buying they're paying for that membership, which is generating those points. And those points are actually literally traversing right up to you. So it's an annual membership. So because people are really understand the value of that membership, they're going to renew that membership. Why? Because of the sound money wallet that the money is actually in that account. And so now they have a vested interest to keep their membership, even though they're not a hardcore recruiter. Their organization is still growing because now they've gone from recruiter to servant. Now all they're doing is trying to help as many people as they can to get out of a fiat currency that's worth less in the future. That's worth less in the future, and put it into a tangible asset to whereas they're going to have leverage in the future. So my bottom line is this: when you're looking at retention, at most network marketing companies, retention is the name of the game. My background is insurance. If I write a life insurance policy, I would like for that insurance policy to stay on the books based on retention and based on the renewals. The more policies that I have on the books, it's going to renew, it's going to generate a commission. So therefore, that is residual income. So I don't necessarily have to talk to a whole lot of people because I already have a block of business in place that's paying me the exact amount of money that I need to function, to run my business and to run my household based on my personal salary. You can get to the point where you're using 7K medals the same way. Even if you don't recruit anybody during the year, those memberships are renewing every single year because the people see the value of what they're getting. Now, there's a lot of other aspects to the Sound Money wallet, but one of the things that really got my attention on as far as the security of it is it's insured by Lloyds of London. Now, that may not be a big deal to the average person, but when you're talking to a financier, or you're talking to people that are in the business and they understand finance and they understand that Lloyds of London is protecting the Sound Money wallet and the Sound Money vault, what that means is that there are certain safeguards and certain protocols that have to be put in place in order for Lloyds of London to even consider insuring you. So because 7K Metals, the Sound Money wallet, and the vault is insured by Lloyds of London, that should tell you everything that you need to know. For people that's doing their due diligence on 7K Metals, all they need to hear is the wallet and the vault is insured by Lloyds of London. That cuts out 90% of your due diligence because Lloyds of London has already done the due diligence. It's just like me and my business, Tyrone French and Associates. I have an A+ rating with the Better Business Bureau. So if somebody decides to Google Tyrone French or Tyrone French and Associates, or look at the Better Business Bureau, and they'll see an A+ rating, what that does is gives them a certain sense of satisfaction that the Better Business Bureau is not going to give me that rating on just something that a happenstance. No, they've done their due diligence. They've looked at whether I have complaints or not. And so they put their stamp of approval saying, hey, look, we checked out this business and this is the letter grade that they're going to get, that they're getting. Yes, 7K Metals has an A+ rating with the Better Business Bureau, but it doesn't come close to saying 7K Metals, the wallet and the vault is insured by Lloyds of London. So I'm going to wrap this up by saying this. The more people that you involve in the Sound Money wallet, the more people that you have within your network that you can literally transfer money back and forth in that wallet, or you can literally transfer gold and silver to friends, family members, and associates within that wallet. Let's say if you get to the point where you have X amount of dollars in your wallet, and all of a sudden there's an emergency to whereas there's a cash crunch and you need to transfer or you need to turn some of your precious metal, gold or silver, into money. Well, guess what? 7K Metals, there's 3 ways of doing it. We have a Pay Quicker account that has a debit card. You can literally transfer that money back into cash, and they will literally put that money on your debit card. Now, you tell me, what other company in this industry where you can have an account linked to gold and silver that's so liquid that you can literally have that money transferred to your debit account within a day? Now, they'll say within a day, but it's based on the timing that you decide to transfer it. If you my experience, if I transfer money from my account to my debit card, it hits the same day. You can transfer money literally back to your checking account, or they can literally send you a check for those transferred funds. So I like to tell people when people talk about 7K Metals, they want to talk about competition. I tell people, stop saying we have competition, because we don't. There's no competitors to what 7K Metals does based on the level of value that you're getting from this membership. The only reason people don't have the membership is because they don't know about it. Okay? So get back with the person that asked you to come to 7K Metals. Take a look at 7K Metals. Get back with your trainer. Get back with your sponsor. Get the information that you need about the Sound Money wallet. But you gotta treat this business like a business. And so there's no fee from cash to gold to cash to silver. It's gonna tell you that if you want to take your cash, your gold to cash, there's a small 1% fee for doing that. But kind of look at it as though, just like with banking with an ATM, if you're banking outside of your network, there's going to be a small fee, a small transaction fee. So kind of look at 7K Metals as far as whatever fees that you have associated with 7K Metals. Guess what? You're a small business owner, so you get to write that off. Anybody can contact me at tyronefresh.com. I have an app, which is text Tyrone to 36260. I would be more than happy to answer whatever questions you have, because it's going to add tremendous value to your business.